myself Vaibhav. In today's session of Visual JForex, we will be starting afresh for the algorithm designing using the indicator relative momentum index RMI. As the name suggests, it is a variant of the RSI and it is more advanced, and it gives us the idea for the momentum on the underlying instrument in a more reliable way, or you can say smoother way. We can observe from its plotting on the chart that we have this indicator for helping us out in looking for the momentum. And if you are well familiar with the RSI, you might be aware that the output value above 50 is considered bullish. So similar is the story for the RMI. The output value above 50 is considered bullish, and the output value below 50 is considered bearish. And it is a bound indicator, means its values can be only between the range of 0 to 100, and we can also define certain levels such as 20 on the lower side and 80 on the higher side, which will give us the oversold and overbought scenarios respectively. When we have the value below 20, that means the underlying instrument has been in over sold territory, and if the value is above 80, that indicates the overbought situation. And for this session, we will be mostly relying on the midpoint, that is the 50 level, which will be a critical marker while determining whether to go for the long or to go for the short trade. If we have the momentum output value above 50 for last couple of hours, we will be relying on the data for last 6 to 7 hours, and for that we will be utilizing the RMI indicator values spread over a period of time. We will also be considering the price action, how the price action has played out, whether there is enough of volatility in the underlying instrument or not. So that is going to be the key aspect of this algorithm, and I will give you a brief idea how we are going to design the conditions for the execution of the buy trade. So we need the RMI value above 50, and as you can observe here, that's not really the case. And somewhere here it starts to climb above 50. Okay, so we need last hour's RMI output value to be above 50 but below 55. And why below 55? The simple reason is that we want to get involved in the initial hours of the momentum shifting on the bullish side, or it is gaining strength. So that's why we are utilizing this value band of 50 on the lower side and 55 on the higher side. And not only that, we want the trade to happen only in the correction territory. So we are not really going for a trend change. Rather than that, we are looking for the initiation of the trade whenever we have the dips while the underlying instrument has been in the bullish momentum. And for defining the condition in such a way, we will also be relying on the RMI output value 6 hours back. So to retrieve the data 6 hours back, I will be using the RMI indicator with the look back period of 6. And that value should also be above 50 for the buy trade to take place. And as I said, the RMI value for last hour should be above 50. And I think we can go about this in two ways. We can use the combination of the current RMI and the last hour's RMI, or if you want more stability, you can use the combination of last hour's RMI and the RMI of the penultimate hour. So that can also be done. And for this session, we will be relying on the combination with the loopback period of 1 and 2. So we will be utilizing the last hour's RMI output and the RMI output an hour earlier than that. And also, we will also be considering the RMI output value 6 hours back. So we will be relying on the RMI output with three different indicator blocks with the different loopback period of 1, 2, and 6 respectively. And whenever we see that the momentum is also good enough and the output value is now rising above 55 after having spent considerable amount of time below 55 but above 50, we can start to initiate the trade provided the price action is also strong enough. So for that, we will be considering the closing and opening level of the last hour. We will need the closing level to be higher than the opening level by at least say 5 to 6 pips. You can define the value as per your requirement. For a representative purpose, I will be taking the minimum difference of 6 pips between these two. And also we want the correction to have taken place in the earlier hours. So we will also be relying on the price action in the penultimate hour. So for that, the get historical candle of the lookback period 2 will be taken into consideration along with the last hour's price action data. So that's how we are going to look for the buy trade. And for sell trade, the conditions are going to be inverse of what we were looking for the buy. Here we will need the value for last hour's RMI to be below 45 and the RMI output value 2 hours back should have been between the 50 and the 45 level, and also the RMI value 6 hours back should be below 50. So that will make sure that this is uh, this is the time where retracement has taken place after earlier decline, and now the possibility is emerging that we might be looking for the continuation of the bearish trend, and this might be the time. And as we had done for the buy side, we will also be relying on the price action on the hourly time frame. So we will be considering the last hour's closing and opening value. And for the sale trade, we want last hour's closing value to be less than its opening value by at least 6 pips. And in the prior hour, the closing value should have been above its opening value. So that's how this combination is going to work out. And now we go back to the Visual JForex board, which has been developed by the Dukascopy Bank SA. Here I will make you familiar with this indicator RMI. Here it is. This I will change to hourly time period, and we will need the look back period of 1, and then we can use these output value. So here, this is the RMI indicator block, and once we define these input parameters as per our requirement, we can rely on this output value generated for the given configuration, which will help us determine whether the trend is bullish or bearish, and then accordingly we can look to initiate the trade. And we are going to need 3 blocks of this. Prior to that, the instrument subscription will need to be done, and for that I will need to add the if blocks. Default instrument should match candle instrument as we are using on candle as our start point. And then this should match the instrument of our choice, which is going to be Euro USD. Here it is. First input equals second input. Again, same condition. And in this if block, we will need to check for the position information, position amount or position should be equal to 0. That means there is no current, pending or open position on the account. RMI we will be relying on the combination of three RMI blocks of different loopback periods, but the candle period will remain the same. Value of 2 and 6. Along with that, as I explained to you on the chart, we will also need to add the get historical candle blocks. Hourly, and here shift value 1 and 2. Okay, and after this we are also going to need two 10-second blocks of get historical candle to pinpoint the exact entry point. 1 and 2. So these are going to be the building blocks for our algorithm. And after that, I will bring in the calculation expression block to define the minimum difference between the last hour's opening and the closing value. We will multiply default instrument pip size with a new variable with the value of 6. This one will be A1 into A2 minimum difference. This difference will be compared while executing the buy as well as sell difference, sell trade. We will need the last hour's closing value to be above its opening value by at least more than 6 pips when we will be looking for the buy trade, and for the sell trade, the closing value will need to be lower than its opening value by more than 6 pips. So while determining this requirement, this output value which we have generated using this calculation expression block will come handy. Now as the time is running out, we will stop here with our bare one structure ready, and in next session I will be explaining to you how you can go about defining the buy side. So we will be adding the if blocks and defining the conditions, and also in the process if we have to carry out further calculations we will do that, and not to rule out possibility of adding additional blocks of the RMI or the get historical candle if the need arises. So that's how we are going to go about the designing of the indicator using this indicator RMI. Thank you all for joining in. Do subscribe to the Dukascopy webinar channel to stay updated on the market development. See you next time. Till then, goodbye.